Another interesting session here in Asia. Certainly, if you look at assets which are directly and to a degree indirectly exposed to what we're seeing in the UK referendum, we've seen a continuation of the moves we saw from Friday. So certainly the sterling coming out the blocks pretty hard. There's been a lot of concern about what's happening in UK politics. Will we see, or at what stage will we see an enactment of Article 50, and will that potentially lead to this messy divorce from the EU effectively? So people are continuing to asking questions around what is the actual plan around that. There's big concerns about what's happening with UK growth. We've seen a number of investment banks cutting growth to something like 20 basis points for 2017. There's talk that the Bank of England will have to cut rates. Certainly the swaps market's pricing in a 60% chance of that coming through by the end of this year. And there's even talk that we could see quantitative easing being reenacted in the UK. And certainly sterling coming out of the blocks pretty hard, not to mention the fact that the Labour Party seems to be imploding around Jeremy Corbyn as well. So all these uncertainties breeding further weakness in the sterling. Sterling against the greenback down about 2% at the moment. The FTSE futures coming out the block down about 3%, but they have been lower on the day, and certainly our opening calls for European markets have been lower than where they are at the moment. We are seeing some buying coming into the S&P and FTSE and Dow futures as well. Gold prices continuing to see further highs. In fact, if you price them in Australian dollars, they're actually they're only 35 handles away from being a new all-time high, which I think is quite an interesting situation there as well. But what we are seeing there is the concern about what's happening there has reverberated in those specific assets. But I think as well, you've also seen a big move in the US dollar on Friday. And the implications here for Asia is that emerging markets are underperforming. We're seeing good selling coming in emerging market currencies. Worth keeping an eye on the EEM, which is the emerging market ETF. And China, because of that strength that we saw, had one of the biggest fixings they've had in a long time. So the actual dollar against the CNY rate is now trading at the highest level since 2010. We go back to January where that was a big macro concern for markets. So again, what happens if the US dollar continues to find safe haven flows from that? That will put a lot of stress on emerging markets, and that could be something that could trouble markets going forward. It's not just about the UK referendum, it's about where the capital flows go. So we're having a look at what happens with the US dollar and what ultimately happens there for the S&P and inflation expectations coming through. But what we've seen today here in Asia is a big rejection of these moves that we've been seeing in FTSE and S&P futures. The Nikkei looking really strong at the moment. And we've got the ASX 200 up about 80 basis points as well. So some safe haven buying in some of the telcos. In fact, mining stocks are doing quite well as well today. So a bit of an interesting breakdown in correlations between markets. But certainly there are some worrying themes that we're seeing in markets driven by what's happened from the UK referendum and what that has exposed for European banking sector and also for dollar inflows as well.